IBM's management team has done an excellent job turning the company around, and given its size and its legacy, it's hard to turn around a business of this characteristic. Interestingly, the analysts on Wall Street are expecting solid free cash flow growth from this business. But what's a fair price to buy IBM stock for those of you that are interested? I'll answer that question in this video, and I'll give you a breakdown of my calculation of how I arrive at that fair price using my discounted cash flow valuation model. Let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's start with the section shaded in green here with the free cash flow expectations from Wall Street. The analysts that are following IBM stock expect its free cash flow will grow from $12.75 billion in 2024 all the way up to $16.78 billion in 2029. I've forecasted that its growth rate will slow down from that point on, growing from $16.8 billion in 2029 up to $22.45 billion in 2034. From 2035, I forecast the company's free cash flow will slow down to 5%. So between 2024 and 2034, over the next decade, the forecast is for IBM's free cash flow to grow from $12.75 billion all the way up to $22.45 billion. IBM has shed some of its slower growth businesses and is investing in some of the most innovative categories right now, including quantum computing and artificial intelligence. That should drive growth for IBM when some of the legacy segments slow down even more as enterprises worldwide transition from on-premise technology to the cloud technology. So the present value of all of those free cash flows that IBM is expected to generate from now into the very long term is $415 billion. That's the value of operations. And the reason we need to discount all of those cash flows is because money in the future is worth less to us today for a number of reasons, including risk and the opportunity cost of capital. So what's the weighted average cost of capital I'm using for IBM? That number is 8.45%. I give the company a cost of debt of 7.5% and the cost of equity of 8.76%. To arrive at the cost of equity, I use the capital asset pricing model, which takes the risk-free rate and it adds a multiplication of beta times the market risk premium. The company's beta is 0.71 according to Yahoo Finance, and the market risk premium is 6%, and I use the risk-free rate of 4.5%. Since IBM has a market cap of $236 billion and total debt of $60 billion, I gave them a target capital structure of 25% debt and 75% equity. That's how I arrived at the weighted average cost of capital of 8.45%, which is on the lower end of most of the tech companies that I follow. Usually, a company that has a beta as low as 0.75 or below will be some defensive companies in some defensive industries, healthcare companies, companies that do not have exposure to macroeconomic changes. So IBM is one of the rare tech companies that has a very low beta. So the section in red starts with the value of operations that we calculated in the section in green, and I add the company's non-operating assets or cash and equivalents balance of $13.7 billion, subtract its debt of $60 billion to arrive at the value of equity of $369 billion. But we want to know the price per share, so I'm going to divide that by the number of shares outstanding of 923.578 million. That brings me to an intrinsic value per share of $399 for IBM stock. The current market price is $254. So using these estimates, IBM stock does appear to be undervalued. But I highlighted earlier that the company's beta was just 0.71 according to Yahoo Finance. If you believe that the company's risk is not incorporated properly in the beta and the beta should be adjusted higher. I've done a scenario analysis to incorporate those differences. So I changed the beta to 1 from 0.71, and that would make the intrinsic value per share $274.89, which would be, again, the intrinsic value would be higher than the current market price, but less so than with the beta of 0.71. And if I raise the beta even higher to 1.25, the intrinsic value per share would be $211.88. So that would mean the stock price would be trading above the intrinsic value. But comparatively speaking, IBM's business and the beta of businesses in similar industries, you don't really see them at a beta of 1.25. That's a unrealistically high beta for a business like IBM. A beta of 1 could be on the higher end of what some analysts would consider for IBM stock. So you can evaluate and you can come to a conclusion and say, well, IBM shares, instead of trying to pinpoint a specific number, you can say it's worth between $274 and $399 a share. And so you can say, well, even at the higher beta of 1, it still appears to be slightly undervalued. So take it for what it's worth. I used a lot of estimates and assumptions to come to this conclusion. So this is not a precise calculation. Don't let these precise numbers fool you into thinking that this is some precise calculation. Nobody knows what's going to happen in the future. There's a lot of uncertainty involved. That's why I give myself a margin of safety in these calculations. But even incorporating my margin of safety, it does look like IBM stock is undervalued. Still, please do your own due diligence. Do not make a decision based on this research alone. Let this be one input into your overall decision-making process. I have several other videos on IBM stock you can watch and make your own calculations and decide what you think IBM stock is worth.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.